Here to discuss this in detail, David Gurwitz, Managing Director at Charles Nenner Research. David, it is always good to have you on America's Forum. There you are, Skyping in with crystal clarity. Great to have you.
Likewise, you're in Florida and I'm not. It's still cold up here.
Mercy. Well, we'll try to warm up the discussion. Give us your take on the economy. Is anything going to warm this up? And what relationship, or do we get any encouragement from the markets these days?
Well, I'm going to take what you said before about markets been up and gold and going the other way. We think gold's near a bottom after we called the top 2 years ago. And we think the stock market's near a top for quite a while. So that's how I want to start the conversation. And whoever wants to take the scotch out, they counter it.
Well, the economy, during my days on the Ways and Means Committee, two jokes used to be preferable when we'd bring in economists or anybody to discuss the economy. One of the jokes was, you'll never hear anybody testifying with one hand, because they'll lay out a scenario, then they'll say, on the other hand. Then the other joke was, you could take all the economists in the world, lay them end to end, and still never reach a conclusion. So we understand it's a challenge with the economy, but let's take a look at the numbers. The U.S. economy continues to shrink. It shrunk 1%. So you got that going. Why the disconnect between Wall Street and Main Street?
Well, this has been going on for 5 years. You know, 2009 was the bottom, and we follow cycles. I've been on the show enough with you. Actually, I think the listeners and viewers who write into us appreciate that we don't really look at so much what the news says. We look at repeating patterns from the past. And according to us, cycles, which come from the Greek word circle, repeating top to tops in any data series, indicate what's going to happen, and it's not looking so good for an overall picture for the next several years in stocks and in bonds. War cycles are bottoming, which we're one of the few that have talked about it. You look around what's going on, there's a lot of hot spots in the world. China and Japan, Africa, we obviously know, with Mr. Putin, and we know the Mideast. And so there's a lot of spots that could go, and cycles seem to be topping. We don't know what causes what. We just follow each thing independently, but we don't think it's going to be really positive.
Well, let's go back and review and reassess the nature of the cycles. For example, last June, it was your prediction that stocks would go down 60% over the next 7 years.
Right.
Employing your observation of cycles, do you still think that is in the offing?
Yeah, if you remember, I said it wouldn't be starting then. It would be starting into this year, and that's what we totally agree with that. We still see the Dow going down, well over 50% from its level now. And then afterwards, a major move up over the next decade. But that's, we have to survive the next 5 or 6 years. So but that's what we see.
Yeah, well, it's interesting. You continue to talk about these cycles, and you touched on gold a minute ago. Let's, pardon the pun, drill down on the gold a little more. What you see happening now, because what, they're an 11-month low right now for gold?
Yeah, we think they're going to go lower. The cycles aren't bottoming yet, and we did call the top 2 years ago, and we still think it's not time to buy, but it will be, and then we think it will go back past its highs, but we've kept everybody out. We said there'd be a bounce from 12 to 13, and now it's got potentially another 100, 150 points further down. We like to line up the level and the timing, and so that's why those who are not in should wait. Those who are in, if they want to hedge, they can. It's been very difficult to be in gold the last 2 years, as you know. But it's getting near a time when it will be a bottom. Gold stocks look like they're bottoming a little bit later. So the third quarter should be, July, August should be a good time to go long gold rather, for quite a while.
So let's engage in a hypothetical here. Let's say there's a guy on television interviewing you who has more than a casual interest in trying to get a big return on an investment. Hypothetically speaking, or maybe even in your own case, if you were taking a look right now where to invest, where would you look for the greatest return right now?
It's funny. I just had that question before you called. Three straight people. Well, and none of them were related to me. Also,
Well, good. Well, see, you're spreading. I don't want to say spreading the wealth. I'm not. You're not a redistributionist, but we're interested in your advice.
I said the same thing to all of them.
Good.
You know, my mother used to serve different food to us than when she ate, and I'm giving you the same answer we had. The answer is you have to look at each category. If you wait, stocks will be a very good short. Bonds will be a very good short. Gold and silver will be very good long. Grains will be a very good long. We still think there's going to be deflation in crude and in nat gas. So but not at the moment. There's the home run to do. You know, we're not LeBron James. You're down in Florida. That, you know, we can kind of take over what's going on. We have to sit back and wait. But that's kind of what we see, and it's a question of being a little patient now till we get ready for those bigger moves in those areas, in those directions.
So steady as she goes, maintain scrutiny of the markets, and stay mindful of the cycles that show up historically.
Right to our site, and they get samples of our work, and they get to read our attempts to try and figure this all out.
Well, David, we always appreciate your insights into figuring this all out, and it's always entertaining and informative. Thanks so much for your time again today on America's Forum.
Great, John. Look forward to the next time.
David Gurwitz, Managing Director of Charles Nenner Research, giving us his thought. Remember, it runs in cycles. I'm no economic expert, but always on the House floor I would quote Mark Twain, who said, "History doesn't repeat itself, but it rhymes." Straight ahead, not so much a repetition, but a preview. What's coming up on Steve Malzberg's program this afternoon? Hint, it's not Steve. Like me, he's taking a little time off. We'll visit with his guest host and have more for you as we close out America's Forum.